Now we'll see the second element of cost volume profit analysis, and that is contribution. Now what is a contribution? We have seen that contribution is nothing but sales minus variable cost. It is a point where your variable costs are recovered from the total sales, and the items amount which can be left out can be contributed towards fixed cost to determine a profit or a loss. So hence contribution can be also calculated by fixed cost plus profit or minus loss. It can also be calculated with the help of a PV ratio, which I will show you when we are going to learn a PV ratio, that is sales into PV ratio. Alright. Now let us take one small illustration for determining a contribution. Now what does it say? It says that determine the contribution per unit. It is asking for per unit for 20,000 units. So we are going to determine a contribution per unit, and then we are going to determine a contribution for total 20,000 units from the following information. Now what has been given to us? We have been given selling price per unit rupees 20, variable cost per unit rupees 15 and fixed cost rupees 80,000, and has been asked to determine a contribution. Okay, let us go back and look at the formulas. So which formula I can use? So I have been given a sales and I have been given a variable cost. So I can determine a contribution, correct? So I can use contribution is equal to sales minus variable cost. I cannot use this because I don't know profit element, correct? So I don't know PV ratio. So what is the easiest way to use the formula? I use this, that is contribution is equal to sales minus variable cost. Okay, let us solve it. Now in that illustration, what has been given? We have been asked to determine the contribution, correct, for first for per unit. So contribution per unit. This is what one question has been asked, correct. So what has been given? We have been given sales price per unit, right? How much is sales price per unit? Sales price per unit is 20. That is what they have given us. Then we have been given us variable cost. That is also per unit. So how much is the variable cost per unit which has been given by them? It has been given 50. So I think I can determine. So which formula I am going to use? I am going to use a formula, that is contribution is equal to sales minus variable cost, right? So sales per unit I know 20, variable cost per unit I know 15. So what is the contribution? Contribution will be 5 per unit, right? If I want to determine the contribution for 20,000 units, because they have also told me to find out for the given units. So how many units are there? 20,000 units. So if I have to determine the contribution for 20,000 units, I am going to multiply 5 per unit. So how many units I have? 20,000. So total contribution becomes 1 lakh. So this is how I can use the formula. So again I will repeat. We have been asked to determine a contribution per unit, and then we have been also asked to determine a contribution for 20,000 units. Now what has been given to us? We have been given a sales price, we have been given a variable cost, and we have been given a fixed cost. But right now I don't require that fixed cost because I can use this formula, that is contribution is equal to sales minus variable cost per unit. So what is the per unit sales price? 20. What is the per unit variable cost? 15. So 20 minus 15, contribution per unit becomes 5. For 20,000 units, the contribution will become 5 into 20, 1 lakh, right? Now if I want to go further and determine a profit, I can determine. Now I know my contribution is 1 lakh. So from contribution minus if I deduct fixed cost, I get profit. Remember your equation. What is your equation? Correct? Contribution minus fixed cost is equal to profit, right? Because it is contribution, fixed cost plus profit. So what is my contribution? My contribution is 1 lakh. My fixed cost is given in the problem is 80,000. So what will be the profit? The profit will be 20,000. So if my contribution per unit is 5 per unit, for 20,000 units I will have a profit of 20,000. This is how the second element comes up, that is contribution. Now we will go for the third element, that is PV ratio, profit volume ratio, which is a very, very important part under a cost volume profit analysis. Next element in cost volume profit analysis is a profit volume ratio, which is called as PV ratio, which is also called as a contribution sales ratio. Now, why this PV ratio is important? Number one, it indicates the financial health of the organization, whether as a manufacturer, which you are goods which you are producing and selling into the market on a particular price. Okay, with the help of PV ratio, I can find out, I can determine whether you have a good financial health. That means, are you in a good, better financial position? So that can be find out or determined with the help of a PV ratio. Similarly, it also gives the relationship between contribution and sales. So what is the percentage of variable cost to sales? Sorry. Similarly, it also gives the relationship between a contribution and sales. It also assists in determining a break-even point. Break-even point is a point where organizers are or a manufacturer are in a position where there is no profit, no loss. That means their all costs are incurred. So that is called as a break-even point. PV ratio also helps us to determine various sales level, profit at various sales level. That means if I sell 10,000 unit, what will be my profit? That I can find out with the help of profit volume ratio. If I increase the sales to 5,000, what will be the effect on my profit? So these type of decisions I can take with the help of profit volume ratio. PV ratio also helps in determining at a particular output sold how much desired. Let us say if I want to sell, I want to earn a profit of 5 rupees from one product which I sold. Okay, this is my desired profit. If I sell 10, my profit will become 50. So this is what my desired profit. So what is my desired profit? 50. So if I sell 10 units, how to get the desired profit? So what should be the value? What should be the volume of sales to get your desired profit? So if I have an intention to earn a 50 rupees profit, how many units I need to sold? That can be determined with the help of PV ratio. Alright, now similarly, now what does this PV ratio indicates? How do I know whether I have a good PV ratio or whether I have a bad PV ratio? If your PV ratio is higher, PV ratio indicates high profit. Okay, PV ratio is normally comes into percentages, and if you have a higher percentages, that means you will be likely to get a higher profit. Lower PV ratio leads to lower profit. Okay, now how do I increase PV ratio? I can increase PV ratio by increasing the selling price or decreasing the variable cost. So if I have to either increase the selling price or I have to either reduce the variable cost. PV ratio can be decreased in reverse manner. Increase the variable cost and decrease in sales price. So that is what PV ratio. Now PV ratio can be determined in number of ways. There are multiple formulas available to determine PV ratio. We will see some of them. You should know to use the appropriate formula when the information is provided in the problem. Alright. So how? The popular one is this. PV ratio can be calculated by contribution divided by sales into 100, or fixed cost plus profit is also contribution divided by sales into 100, or sales minus variable cost is also contribution divided by sales into 100. This can be determined when you have only 1 year's information provided. Suppose you have been given 2 years information. So 2019, 2020, both the years you have been given an information and you have been asked to determine a PV ratio. In that case, you can use this formula. What is that formula? Change in profit or contribution divided by change in sales. So we will take a difference in contribution of 2 years and difference in contribution of sales of 2 years, and I can determine a PV ratio. PV ratio can be also called in this way. Fixed cost divided by break-even sales in units into 100 divided by selling price per unit, or profit margin of safety into 100, profit margin of safety 100 about selling price per unit, or this. This we will see when we are going to learn margin of point safety or break-even sales. That means if break-even sales is given or a margin of safety is also known, you can also determine PV ratio provided fixed cost or selling price per unit is known. Okay. This is little advanced things which we will see into the next session. Okay. Now we will try to take a one simple example. We have been asked to calculate a PV ratio from the following information. So what has been given to us? We have been given selling price 20 per unit, variable cost 12 per unit, and we have been asked to find out the PV ratio. So which is the formula which I am going to use? You look at those previous formulas. So just have a look at this. So which formula I can give? What I have been given? I have been given sales, I have been given variable cost. So that means I can use this formula. Sales minus variable cost divided by sales into 100 or contribution by sales into 100. So I can calculate a PV ratio. Okay, let us do that. Now we are determining PV ratio. So PV ratio is equal to contribution divided by sales into 100, right? Or it could be called as sales minus variable cost divided by sales into 100. Now what is in the problem? How much is our sales? Our sales is 20 per unit. What is our variable cost? 12 per unit. How much is the total sales? 20. So I know it is 8 by 20 into 100, which is 40%. Right? So I know my sales is 20, my variable cost is 12. So contribution by sales into 100, if I use this formula, I get 20 minus 12 divided by 20, 8 by 20 into 100, 40%. So in this case, the PV ratio will become 40%. Right? This is the solution for that illustration. Okay, we'll take one more illustration. The answer for this, now we'll go further. Next illustration. Now that is what I was talking about. When they give you 2 years data, then how do you determine a previous PV ratio? Look at this. We have been given a data for 2019 and we have been given a data for 2020. Sales for 2019 is 1,60,000 and for 2020 is 1,80,000. Profit is 40,000 and 50,000. So which formula I can use for this? Change in profit divided by change in sales multiplied by 100. Okay, because profit is given. So I have to take the difference between a sales and I have to take the difference between the profit. Clear? And I can determine a PV ratio. Okay, let us solve this. So 2 years figures has been given. So I can determine PV ratio. Okay, for that illustration, second illustration, I can determine PV ratio by using the formula change in profit divided by change in sales into 100. Okay, now I have been given 2 years profit. Change in profit. So 2020 and it has been given 2019. So 2020's profit is 50,000. 2019's profit is 40,000. So 50,000 minus 40,000. Similarly, change in sales. So 2020's sale is 1,80,000. This is 1,60,000. I hope so. Into 100. So we get 10,000 divided by 20,000 into 100. In this situation, PV ratio will become 50%. Correct? So when there are 2 years figure has been given, your formula will be change in profit divided by change in sales multiplied by 100. So profit for 2020 is 50,000. Profit for 2019 is 40,000. So 50 minus 40. Sales for 2020 is 1,80,000. Sales for 2019 is 1,60,000. So 10,000 divided by 20,000 into 100, PV ratio becomes 50%. So likewise, we can determine various PV ratios by using various formulas that we will see into the further class. So I am just basically right now giving you all the introduction for the elements of cost, volume, profit analysis. So to summarize what we have seen, the first element we have seen is a marginal cost equation. The second element we have seen is a contribution, and the third element we have seen is a PV ratio, which is a very important factor. The fourth element will be break-even point, and margin of safety will be the fifth element that we will see into the next classes, and then we will take a mixed kind of a formula under a mixed kind of a problem under various situations. Thank you.